It's 7:22. Some banks are quietly changing the terms of millions of credit card accounts as they brace for a tough new law that will limit rate hikes. But are fixed rates becoming a thing of the past? Here to talk about it, financial guru Howard Dvorkin in a segment sponsored by Consolidated Credit Counseling Services. Hi, Howard.
Good morning.
Good morning. All right, so Bank of America last month and JP Chase both told some of their customers we're switching from fixed rates to variable rates. Recently Discovered did the same thing. When credit card companies do this, how does it affect all of us consumers?
It costs consumers more. Unfortunately, what is going on out there? There was a big hoopla back in May with the new credit card bill of rights, Christian.
Right.
Which was supposed to save a lot of money. And in the back of my mind, I kept saying, why are the banks allowing this to happen? They're the most powerful lobbying group out there. And all of a sudden, it came to light, and we started getting calls at Consolidated Credit Counseling saying, hey, I have a fixed rate and the banks are raising that rate and they're changing the terms. Unfortunately, what you see when you enter into a credit card agreement with a company is a unilateral contract that can be changed by the bank at any time. These don't exist in the real world. Only in the credit card world they exist.
Well, when banks and credit card companies do this, are there any exceptions? What about student accounts? What about debt assistance accounts?
Well, we're only talking right now about credit cards. And what is happening also, what is happening that I'm seeing is that credit cards that had fixed rates for life, they're right, they're sticking with those terms that you get this fixed rate, but they're doubling and even tripling the minimum payments. So a payment of, say, $150 could easily go to $300 and even $450 per month. So it's really scary out there for consumers. Why are they doing this, you might ask? For the money, dummy. They want to make more money for their banks and for themselves, and they're justifying it by saying it's better for their business. Yes, I guess making money is better for one's business, but at the bequest, you're sacrificing consumers' security, and unfortunately, you're really going to harm a lot of people over time.
Well, this is scary, and those numbers you just threw out are exponentially increasing. So, what are people supposed to do, and can these companies do it without notifying the cardholders?
They will notify the cardholders by sending them a letter with a bunch of gobbledygook that nobody understands. And at least from my experience at Consolidated Credit Counseling, we have had customers call us and say, what does this letter mean? So it's very hard to figure out what they're trying to do. Now, what can a consumer do? They need to stop using their credit cards and start trying to pay down their credit card bills as much as they can. And in these tough economic times, that is happening. Believe it or not, people are stopping the use of their credit cards and starting to save. I know this is a foreign concept for a lot of people, but
well, I'm going to interrupt you 1 second, Howard. What if someone, I mean, it's tough right now. What if someone cannot stop using their credit card because they can't live within their means right now?
If you use your credit card, you need to make sure that you can pay that credit card off. And that is the only way you're ever going to find financial freedom.
Okay. Thank you so much, Howard. We appreciate you being here.
Thank you.
All righty. Well, you can learn more about Howard and his services on southflorida.com/money. Log on right now to find out if you're a candidate for a debt consolidation program. Hey, watch the video, too, to find out if you can receive a free budget analysis.